The stock market is going to open in 3 minutes. I'm preparing my chart for the upcoming trading session. As you can see, we spiked up, news announcement, small break, new extreme. However, right now we flattened. We entered small consolidation. The bias is right now a little bit more bullish, of course, because we traded up into this consolidation. So no signs of bearish bias just yet. But because market is going to open in 3 minutes, I'm going to wait it out and wait what the market does after the open. Right now, the consolidation continues. You can see the signs are flat EMA, consistent price swings up and down. Is I have to keep drawing these tight channels because this will allow me to understand when the trend played out and when can I expect pivot upon reaching the key extremes. Right now, the downtrend is working lower. I'm going to make it into a spike and a channel pattern. I'm going to delete this and draw a little bit spike and a channel like this. I'm not going to go long just yet because we can get another push down. I was waiting for push above EMA and somehow low or felt second entry short back into the trend range. That never formed because once we push above EMA, we just rocketed higher without a single pullback. So unless you bought at the very bottom, you had no chance to enter. Right now we have a small break in new extreme, but we haven't touched the EMA once. So I'm going to be observing the price action carefully. There can be slightly wider channel. And we traded up into this, so I'm not going to be pulling the trigger on shorts so prematurely. So you can see the main bullish bias is kicking in because we traded up into this consolidation. Also, there's a break in new extreme, but we haven't touched the EMA upon breaking the channel. So a lot of times that means there is more bullish pressure left in the market. So for this reason, you can see the sellers are really struggling to take the market lower and we may have the additional push higher. Alright traders, so I'm resuming back the video because we had massive spike in volatility. We had high impact news announced and everything was moving super fast, so it is basically untradeable. So this area, it was moving so fast. You can see so much price action only in a few minutes. For this reason, I was just sitting on my hands waiting patiently, and now it looks like the market is going back to normal. You can see we have a spike and a channel established, and I'm starting to trust this bearish structure again. Okay, I'm not selling just yet because it is new low, first entry short, second entry short, third entry short. You can see second entry short was horrible below bullish bar, you cannot sell. But if this bond is going to confirm this channel right here, I'm going to be considering lower high confirmation setup or felt second entry long because it is confirming our structure. And you can see we are right now trading a bearish trend down. So this is the correction phase taking its time to the key entry point. This is where all the smart traders are selling. So I'm looking for a lower high confirmation setup. I'm trying to get fill on a lower high here, but the market is still super fast. I already made the scalp, so I have to cancel the order now. I was very quick, but as you can see, the market still very volatile, very fast. This was a great lower high because it confirmed our correction to the key entry point. The trend line held. A brand new push phase has been established. A lower high rejection of the EMA. Notice the tail at the top. Confirmation of sellers present in the market. It's a shame it didn't get filled. It just completely jumped lower. No chance for me to take it. You have to be super fast. Now, if you're a new trader, you may be thinking, hold on, this is also new high, first entry long, second entry long failure. And you're not counting this wrong, but take a look. We already broke the latest lowest low. So the push phase already happened and you want to take the felt second entry long as the part of the push phase developing, okay? So now that the leg down already formed and we exceeded the latest lowest low, this is not really great felt second entry long. I'm treating this only as a first entry short because the push phase down already happened. You want to take the new high, first entry long, second entry long feather somewhere here. Okay, so hopefully it makes sense because we may have stronger pullback now. You have a small break new high, so I'm thinking about right now push below EMA. Why? Well, because this spike in a channel, the key entry point established, is going to get new extreme tested 8 or 9 times out of 10. So I cannot go long just yet. I need to see the push below EMA and to think about selling, testing the new extreme. Okay, I was ready to take the lower high confirmation setup, but it was a bullish bar, so I cannot sell below bull bar. So unfortunately, don't tell me we're gonna make new low without a setup. I can't use double bar entry because look at the tail at the bottom here. We need to get to new low. Lower high is confirming second entry short if I count correctly. New low, no break below first entry short, pullback, yes, second entry short. The fact that we're gonna get new extreme, but there's still a chance for felt second entry long. Let's see if we can get it. Now because we have a break, attempt to create new extreme, very close, double bottom formed. In order for me to sell, I need to see something really good, possible bullish trap. So as you can see, EMA is flattening. There's a big chance the sellers already are considering this break and a new extreme as a test mate. We have swings up and down, For For this reason, I'm trying to predict possible consolidation because we may right now have a brand new market cycle consolidation. Prices reach the top of the trend range. You can see the resistance we established earlier. New high, first entry long, pullback, second entry long, but a lot of bulls are going to get trapped. Hold on, we may have a lower high confirmation set up here, strong rejection. Okay, traders, so I just took the lower high confirmation of the failed second entry long. It's confirming the bounce off the resistance. I really like the momentum. It looked bullish. Instant reverse down. I'm scalping 7 contracts for 2 points, leaving 1 contract as a runner down here, and we reached our target. So I'm going to move my stop loss to break even because anything we make is just a bonus. Now you saw me describing the structure, and once I saw the instant momentum reversal down, influx of sellers, it is off the channel, it is off the EMA. You want to sell high. We waited for a lower high confirmation setup. There was a great failed second entry long. I didn't finish to say this because a lot of these bulls are going to get trapped buying second entry long far from the EMA at the top of the trend range. So this is a decent setup to pull back into range. I'm leaving 1 runner around these lows because this is the bottom of the trend range and this may be our next target. Alright traders, and our runner got hit at break even. Now that our downtrend has a break, moved to a new extreme, it didn't fully go all the way down here. Downtrend played out, so I cannot be really looking to sell just yet. So this is area of indecision. I'm just going to be waiting until something clear is presented. If I'm going to zoom back, we can see that the trend down is medium to weak. So this is not a strong trending structure. It played out with the break new extreme. We have a trend range established, and even this downtrend played out. So all downtrends played out. There was a decent second entry long, quite aggressive, but because the trend down is not as strong, you could have considered. However, there was a failed second entry short, but notice the signal bar, pure doji. This is what we call a reversal pattern above EMA, but the signal bar was neutral, so I skipped it. The uptrend is nicely established. You can see EMA keeps pointing up. I'm really a fan of a second entry long, but the shortened downtrend is still in play, the correction. So I'm not going to jump the gun. I have to trade the market I get, not the market I want. As you can see, we're breaking low EMA, which is good. This is confirming the downtrend is in play. So I'm going to be respecting the downtrend, and I either have to take high low above EMA, or I will simply respect breaking extreme and see what happens. Because after breaking new extreme, we keep making pushes to new high. I'm looking for additional spike and a channel pattern. However, this second entry long is simply closing too far up, so I'm skipping this one. It's not full at the EMA with the body, but mainly it is right at the top of the move. There was a break, new extreme, massive bullish push up, so it makes sense to be looking for bigger channel. I didn't like failed second entry long because this initial trend was so substantial. We barely closed below EMA once, so it looks like there's additional channel. I came back from my break. I can see that our initial spike and a channel has a break and a new extreme, but the bullish pressure in the market still prevails, and we keep creating high highs and high lows every single time. So I have to ask myself, hold on, why are we creating so many new highs after breaking new high already? So as you can see, I'm looking for bigger, wider established uptrend. It fits pretty well. So right now, the uptrend still continues. I'm thinking about high-low confirmation setup here above EMA. I was thinking about buying second entry long multiple tests off the trend line, but the signal bar has bearish body. So no trade for me here. Market is starting to slow down a lot. You can see it's getting wedgy. Pure consolidation now. So looks like I have to wrap it up. So I'm going to wrap it up with my one single trade. Very good trading day today. Structure is very, very predictable. Let's take a look at the beginning of the session because we started with consolidation. There are 2 decent high probability setups. It's a shame we didn't get high-low confirmation setup of set failed breakout here. Now you really have to be careful here. It doesn't look like that in hindsight, but when you're watching this live, this was super fast. Everything is moving quickly. For this reason, this area is no trade zone because you need to let price action subside a little bit because you don't want to be taking setups while there is spike in volatility like this. However, you can see bearish spike down and series of lower highs and lower lows. So it is easy for you to identify that there is a key entry point, which is something you always have to do as a price action trader. You cannot trade these candles without a pattern. So spike down, key entry point is confirmed. Great lower high confirmation setup followed by decent double trap. Well, borderline called to be double trap because double trap technically has to close below the exponential moving average, but because it is broad two leg pullback, such a clean 2 legs up with a break in your high, you can consider great signal bar. However, it was still moving quite fast. Break, new extreme is expected following the trend line rule. This failed second entry long wasn't fully at the EMA. but it is nicely gliding off the trend line, so more advanced trader can consider. As you can see, the perfect market cycle is coming into play because we started with bearish trend down, we flattened into consolidation, and then market reversed straight into an uptrend. So this is textbook example of market cycle. While the EMA is flattening, you can use the bearish bias alongside with the trend range. You can see we identify the key levels because not only the pattern is the downtrend, but also now a trend range. So you can sell high, fill second entry long far from the EMA, followed by a lower high confirmation setup. You're looking for second entry short on the way down, but it never formed too much congestion. No good setups. Now this second entry long was decent because, as I already mentioned, this is not a strong trend down, this is medium channel down. Why? Well, because simply every single pullback breaks the EMA. EMA is not rejecting consistently, so this is medium channel flattening out into consolidation. You can see one bounce, second bounce, third bounce. So all downtrends played out, so it makes sense to be taken along. The safest way how to predict reversal, however, after all downtrends played out, is the reversal pattern. Felt second entry short above EMA. With great bar, this would have been an absolutely gorgeous setup. You know, more aggressive trader can consider, but on my chart, I have pure doji. If you have slightly better bar, you can definitely consider. And then we had a long area without good setups. You can see nothing is really forming here. Brand new channel was established, and there was a failed breakout. Great single bar break, new extreme, perfect price action. So great price action. You can study how to trade the downtrend, how market cycle develops, and how to widen the channel when you have a break in your high, but market keeps making higher highs and higher highs. So I'm gonna wrap it up. I hope you had a good trading day, and I'm gonna talk to you next time. Good luck with your trading.